Good morning, guys. It's Monday morning, 26th of June, 7:51, and we're gonna try to cover market outlook for a week, starting from today. Every week, hopefully, we'll be able to continue this on a consistent basis. So, let's get right on. I'm Tapan from QR Capital, by the way. So here is a SGX Nifty chart, which is not giving us much indication. It's telling us we are likely to expect flat to slightly negative opening. So let us get on to our main indices, which is Nifty 50, and let's start from a longer time frame, monthly time frame. So as you can see, we are to almost towards end of the month, so this candle is more or less closed. And if I were to zoom in, you can see that there was a level which we tried to cross our previous high, but it was rejected, and then that's why we are getting this rejection kind of candle right now on a monthly level. Same thing is happening on weekly. We can see this big red candle, which is telling us that we again got rejected from almost from previous high levels, which is right here. We missed it by, like, I think 10 some points. At least we could not close it. That's what it is. But if you look at both the charts, even on monthly chart, on weekly charts, we are still bullish. We are still above cloud. We are still above our key moving averages. Everything is looking good so far. It's just a temporary correction, in my opinion. If I were to go to daily chart, on daily chart, what you can see is that we have uh, come below our one of the key averages, which is Tinkinson. As we go on making these videos, I will be covering up these indicators also. This is Ichimoku indicator. For your information, this red line is representing the smallest moving average line we have. It's not actually a moving average, but it's average of highs and lows. So this is the we are closing below that Tinkinson, the red line. And as you can see, previously there were these many instances in a recent times when we closed below Tinkinson. So it was around this period right here. So this was around 20th of April. Then we had a small minor correction around May, and then right now around 12th of June is when we closed below Tinkinson. And if you notice, in all these cases, after 3 days, right here, after 2 days, we were able to get back on our track. So overall trend, like I said earlier also, it still looks intact, right? We are above cloud. We are still above Kijinson, which is this green line on our these higher time frames. So it looks good for now. Let's go down to 4-hour time frame. See, what I'm doing is I'm going down each time frame. We started with a monthly time frame, then we went to weekly, then daily, and now I have come to 4-hour time frame. So one really key interesting thing to note about 4-hour time frame is that here we are not only closing below the red line but below green line also, which is a stronger moving average compared to the red one. And if I were to go back in history and see, we closed below that line right here, this entire patch right here. So it was in May that we closed below Tinkinson and Kijinson, the red and green line, and it has never happened before. After that, it was in May again, both these instances. So this is the first time we are again closing below Kijinson on a 4-hour time frame, right? So if you were to go to a shorter time frame, we are definitely witnessing some correction. Right now, I'm going to go to 1-hour time frame. And on 1-hour time frame, this is the first time frame what since we've seen all the time frames where we are trading below the cloud. So what does Nifty has to do if it wants to become bullish? First of all, always remember that this bullishness or change of trend has to start from a smaller time frame, so maybe 30 minutes or 1 hour. But because we are looking at a longer perspective outlook, we are not going to go down to 30 minutes or 1 hour. We are going to stick to 1 hour. This is what I mean to say. So if I were to draw a support line around 18,650, 18,600, let me just go and draw it at 600. I think that's a There is no specific reason why I'm coming to 600. It's a full number, nothing else. But so this is the key level, and even not even this. My personal, I'm assuming that it's not gonna go below these levels where it has given us bounce from. So it was around 18,650 odd levels. So we got multiple support, once here. Even if you were to go back in the past, we can see that there was some key price action movement which was taking place around these levels. So I'm going to be keeping an eye around this level. So if on hourly basis Nifty manages to close below 18,650 or 600, then this correction may last a little bit longer, and if that happens, we will again go back to 4-hour time frame and we'll see what are some things which are happening. If you notice, if it does continue to happen, we will remain below these two key averages and also our Chicago line. And like guys, even if you don't understand this stuff, don't worry, as we go on I'll explain this in the future webinars. But always remember, if you want to remain bullish, all the price action, everything should be ideally above the candle. And if you notice right here, this line, which is Chicago line, the purple line, is touching the candle, it's not a very good sign. Anytime Chicago line is touching a candlestick, touching a price action, it tells you a sign that a consolidation or a reversal of trend is likely to be on the cards. Now if we were to guess that what has to happen for Nifty to become bullish, well, in my opinion, what I would say is that Nifty has to cross and close above 18,700 odd levels, then it can become bullish. So if I were to write down our analysis, is we are going to keep an eye on 18,650 to 18,600 levels. This is going to tell us about bearish trend, and on upside we are keeping an eye on 18,700 to 18,750 levels for bulls. So this is what I'm keeping an eye on for this week. I mean, of course, it's only 100-200 points, but what I'm basically trying to say is that if bears are supposed to be in control, if they want to be in control, they will have to break these levels. If bulls wants to be in control, they have to break these levels, and if price remains in between these levels, like what is suggested by the 4-hour chart, then we may be in for some consolidation. But like I said earlier, looking at monthly chart are definitely bullish, weekly charts are definitely bullish with some minor retracement. Daily charts are also looking really good. Where did that drawing go? Okay, perhaps it's on the 4 hours chart, maybe. Yeah, okay. So so that's our analysis for Nifty. Now if I were to go back and try to see all the indices, I'm gonna make this little bit quick. So if you notice, look at this chart of, let me go back and look at this chart of Nifty on daily. Do we see that the latest price action is below Tinkinson? So any index which is trading above Tinkinson, it tells us that it is stronger compared to Nifty, right? Assuming it's above cloud, right? So let's go back, let's start with Nifty Pharma. As you can see, it is trading above Tinkinson. It has taken support at from Tinkinson, so Nifty Pharma is looking good. Healthcare is also looking good. Same thing, just like Pharma, it has also taken support from the red line. It's trading above cloud. Nifty Private Bank is trading below Tinkinson and below Kijinson. So Nifty Private Bank Index is in fact weaker than Nifty. Bank Nifty is also weaker than Nifty, because unlike Nifty, it is trading below Kijinson and Tinkinson both on daily time frame. And if you look at the CK, you can see that it is already consolidating. It is already in the price, like I told you earlier. If it if it is touching price, it's not a very good sign for trend traders. Basically, it can either be it shows it can either do consolidation or it can do trend reversal, right? Consumer index, so far it was having a really good run, as you can see here, but right now it's for now it is performing a little bit worse than Nifty, because Nifty was trading somewhere just below Tinkinson. It has managed to close a little bit below that level, and I'll be probably keeping an eye on 80-60 level for it to go down and take a support and then move up from that level, right? uh, CNX Finance, again, this is doing better than Nifty, above Tinkinson, above Kijinson, same thing. FMCG, just like consumer index, it is also likely to take a support. In fact, if we see any kind of reversal, this index can probably be one of the key ones which can start to move up. Nifty, we already saw it. CNX Realty is just doing similar to what Nifty was doing. MNC, similar to Nifty, a little bit worse than Nifty. CPSC, same thing. IT is overall a very, I mean, not very, it's a weak index compared to Nifty, basically, because you can see it's really close to the cloud, and overall it's not looking too convincing. Auto index, even though it was doing better than Nifty, it has taken hit also. Again, this is something I'll be keeping an eye on. If we see a reversal in Nifty, I'll be keeping an eye on auto index as well. Energy, same thing. PSU Bank, worse than Nifty in the cloud. In fact, this was the only index which was in the cloud so far. So even though few stocks did give move in last week, the same thing has been corrected pretty fast, pretty strongly. You can see these two strong red candles. PSE, same thing. PSE are sitting at a strong support. So if we see a reversal again, PSE is a index I'll be keeping an eye on. Commodities, they probably can take a support around this level. So there is a more fall likely to be expected. Oil and gas, worse than Nifty. Consumer durables, same or more or less same like Nifty. Worse than Nifty is media, and metal index is also not that good, right? So this is as far as index analysis goes, right? There are few stocks which there is one specific stock which I'm keeping my eye on, which is Vadilal Industries. So Vadilal Industries looks good. As you can see, it has generated good volume in recent times, right here, right here, right here, right here. The thing I really like about this specific stock right now is that during our recent fall, the stock has managed to do well. So I'll be keeping an eye on Vadilal Industries for 2712. So around 2710, 2715 level on closing basis is what I'll be looking at this. And if it remains above these levels on closing basis, I'll be buying this, keeping my stop loss as 2500, so about 200 rupees stop loss. And of course I'll be expecting 1:3 kind of scenario for my targets. So if I were to keep my target open, I hope I'm able to get this. Yeah, it is. Yeah, so targeting, yeah, these levels 3133, 3100 is what I'll be aiming for. But like you can see on around 2900 is when we can see some sort of rejection, but I'll be keeping an eye on this. I know the RR looks a little bit difficult right now, but like I said, the part which I really like is that it is performing well in these falling times, right? So this is Nifty and index analysis for this week. As we go on, every week we'll be doing this. I'll try to incorporate more learnings for everyone. I'll try to decode this indicator called Ichimoku every week, and then maybe your understanding will become more clear if you are not aware about the indicator. If you are, I hope you enjoyed this analysis, and don't take this as an investment advice in any way. It's just for educational purpose. uh, that's it. Have a good trading week from QR Capital. Thanks a lot, and thanks for your time.